spin somewhere.
Last night.
The yoke is too weak for it, yeah.
Did it?
Yeah.
Everything stayed there, it did?
Yeah.
And it shut itself off.
It's working away. Don't worry, I'll have to go through edit it. I'll take it once.
Yeah? No bother.
Yeah, so they should all be available next week up on YouTube anyway.
I tested you my email just in case you haven't
Yeah,
got it.
you need a Gmail account to log in because all the videos are private.
The Gmail one.
Yeah, so when I will just share it all with all you can so you can see what.
No bother. Talk to you later. Okay, so you are planning of the audit financial statements. Okay, and so like you've got the 3 lots of notes. You have the overhead ones. Okay, you have this ISA 300 from the manual I gave you, and then we've got the audit planning letter and the audit planning memorandum. Okay, but I'm going to do that to just document it down and just go through the important parts of it on our sheet here. Okay, so audit planning. Yeah, just to make it more, instead of listening, sometimes when you just write stuff down, actually might help it. And we're looking at ISA 300. Okay, so our audit planning. Actually, grand, or is it quick in your neck? Are you alright? Yeah? Okay, so it's prepared, okay, so the audit plan is prepared by the audit senior or the audit manager. Okay, and it depends when you're doing your plan whether it's a continuing engagement or it's actually a new engagement. You're looking at 2 sides of it. Continuing engagement, or we're looking at a new engagement. Okay, so if you were having a continuing engagement, you take out last year's file. Okay, and you bring forward the relevant information to be updated. Okay, so you'd be kind of looking at your engagement letter and see if you actually need to get it updated. Okay, and just see, does it need updating? Okay, the knowledge of the business. DG. From the previous year. Okay, or sometimes you might have like leases information that they are carrying forward from last year into this year. All the relevant information you need for the new year. Which one? Leases? Leases, yeah.
You put in a blank line just where you're...
Oh, right, I put in it because it's too far over. Is that better? Yeah? Like you'd have a lease maybe that's for 5 years, so you have all documentation maybe in last year's file, you want to bring it forward to the next year's, the new file now, and just review it and look at it and get your knowledge of the business back again. Like if you've been doing an order for the same client for 5 or 6 years, you're well used to Do you know what I mean? The client and what they do and everything.
Especially if you win an account.
Yeah, that's it. Okay, but if it's a new engagement then, okay, you must get professional clearance before you even started. You must get professional clearance is obtained from the previous auditor. Is that too far over? No, yeah. Okay, so you get a professional clearance obtained from the previous auditor, and you get a letter, must actually be inside in the file then, so you get a letter from the previous auditor, and it just states that he has no problem with you taking over the audit and there's no issues with the company you're taking over. And that'd be the same though if you were changing accountant, the new accountant would have to go back to the old accountant and get the same clearing from them that it's okay to take over the file. Yeah.
And do they then pass on all of the
Yeah,
file that they have?
yeah.
onto the new
Like
accountant?
they do, no, they wouldn't pass on everything. They give you last year's set of accounts. They give you the bank recs. Do you know what I mean? Their working papers for bank recs, debtors, creditors, loans,
They just give you
leases.
the balances. then,
Give you the
so-
balances. Yeah, yeah.
So all of the other files that they might have,
They
they have to store them.
they have to store them
themselves.
themselves. Yeah, yeah, yeah.
How
And
long
like
do you have to keep them for?
6 years for the but they can go back further. Yeah, but like that's how you get the balance. Like you get the bank rec, like with the outstanding checks, like and all that. Like you get the breakdown of the creditors, the breakdown of the debtors, the breakdown of the loans.
And as a client of an accountant, can you go in at any stage and see your file?
Oh, you can, yeah.
Can you remove your file from them?
You can remove your information, but the accountant have to want their own working papers. Yeah. But like all the documentation given into them, like the invoices, the checkbooks, the bank statements, that's all there. That's the client's.
You own that.
They own that, yeah, the client. But whereas you'd have your own working papers where you'd have written up the check payments, you'd have done bank recs, you'd have done debtors listings, creditors listings. That's the accounting side of it then. Okay, and then the client, which is a big thing now as well, the client is assessed and identified for money laundering purposes. And money laundering is a big thing. That's not an illegal operation going on somewhere along the line there. Okay, so it's just two different ways you actually look at the client before you actually start, and there'll be more things out there along we'll actually be doing. So your next, is that alright, yeah? The next job would be why we need, the need for planning. Okay, so I'd be a heading here for the need for planning. Sorry? Yeah, we leave a space and look at this now as a separate need for planning here. A separate heading on its own. So you could even draw a line under that. That's just like to get a, do you know what I mean, if you're taking on a new engagement or taking on an old engagement, even before you...
I know, this is relevant to the whole...
It's the whole lot, yeah. Okay, and these are kind of like there's, 5 or 6 bullet points for your need for planning. And is this like all given, do you know what I mean? Like, how about like reading through a whole page of this? Whereas if you have a bullet point sometimes, do you know what I mean? It just help you here. And then we can flush it out as we're doing the questions then. Okay, so to ensure appropriate attention, okay, to ensure appropriate attention is given to different areas. What we're going to do is identify all the different areas you need to look at, and then you're going to plan how you're going to do each of the different parts of it. Okay, to ensure appropriate attention is given to different areas. Okay, then we're going to identify potential problems. Okay, like if you did the audit last year and you're doing now again this year and you had problems in certain areas, these would be like where you'd be honing in on these and seeing are the same things going to crop up now again this year. Okay, to assist in proper assignment of work, and this is like, you know, you'll be looking at who is going to do what job within the audit team. So like your audit manager, your audit senior, you've got your juniors in who will actually be doing the nitty gritty little work, you know. Okay, to facilitate time to review, if I see so give yourself enough time to actually do everything and review everything. Okay, to aid coordination of work with third parties. Okay, aid coordination of work with third parties. And our last one, to ensure work is completed on time. Okay, so it'll be on why we actually need to do the planning. It's like if you imagine you're doing a big, huge audit, and they like have about maybe 400 or 500 people. Okay, like with millions of transactions going on all the time. So, I mean, you have to plan every little step of that to actually see how you're actually going to do it. Whereas with a small audit with only like a couple of transactions and one employee in the company, you have no problem then. And they're all no like audit exempt as well, so it's a big help. And so like you have to like say, is it the 3 million now, like to actually be within an audit? It's like you're taught like a lot of the audit work is going down. Okay, then our next heading just copy that there now, so we're heading again. Okay, and this is our factors influencing our planning. Okay, so obviously it will be the size of the entity. Okay, so the size of the entity, complexity of the audit. It's not about like they're like, do you know what I mean, if you've got a head office, okay, where one part of the audit is going to be heading on, is going to be going in the business, and then it's got a couple of different outlets where you actually might have to go out and actually go to different shops or maybe different locations throughout the country, how you're actually going to, do you know what I mean, do that. And then if there's complex areas within the audit that you found last year, and how you're going to actually deal with them again this year. Need okay, for members to be briefed. And that'd be like, you know, the members of the audit team. Do you know what I mean? So if you've got the members of the audit team who did the audit last year, I mean, they know what to expect and where to do and what to do. Where you've got someone new coming on board, you know, how you're going to explain to them and what you're going to do, what they have to do, and obviously like training and everything like. And then the technology to be used. And we'll be doing this to the way you use what are called CATs, computer-aided audit techniques, where you actually have a system set up that actually goes in and audits the computer system for you. or whether it'll be like a purely manual, and normally it'll be like some of each. So you'd have a program on your, say, USB key, you go in and actually would do the auditing for you on the computer program.
Do you have to be an auditor to have that?
Well, yeah, you'd have.
Could you as a company have it just to double check? before you
It
send
probably,
out
it
your
depends,
accounts?
yeah, and the internal auditing department probably might have one in there. Yeah, to make sure that their internal controls are actually working right, so when the external auditor comes, they know that their internal controls are working properly. Okay, so there are factors to influencing our planning. Okay, and then the important thing is that you have to actually document all this, and you see from our audit planning memorandum, that's like 26 pages, is it? 26 pages long for our audit planning memorandum. Okay, so the auditors should develop.
Is this something we call that
Yeah,
again?
yeah. Should develop and document an overall audit plan. Just taking my figure here.
Two ends in there.
Those two ends in what?
And
And end. It's doubly important. Okay, this is going to be our audit plan. So if you want to go to your audit plan memorandum there a minute and just you can actually see what's actually involved in doing it. Okay, so you can see there's actually 11 sections plus the two on top, a planning summary and matters forward. And it just goes through each little section about what you actually have to do. So I'm actually going to give you the little headings, so you'll have all the other planning in one sheet, and you've all the little headings underneath it about what you actually have to think about. And then we'll give a look through the little different bits and pieces here, but I'm not going to read through 26 pages of the audit plan, but I think it's good to actually see a physical audit plan and what you actually would have to be looking at. And to see, if you look at the very back page there, just so you can see, page 26, see the signatures are supposed to be on it, so like that you have actually read through all this, depending on who, your name, your signed and your date. Do you know what I mean? And they're all signing off on that they've gone through the audit planning memorandum and they know what's involved in the audit plan. And just make sure that your date is like well before you actually start your audit.
What's B2 about? Is it just
That's like, for your audit, it's like everything is referenced. So you start off with, you go through the whole of the alphabet. And actually email you on, actually I have the whole audit plan, so you'll actually see the whole, not the audit plan, but the audit program, and everything's actually cross-referenced. So B is your audit planning, W could be your sales, do you know what I mean? Everything has a separate coding system for it. And what you do, like you have one copy, and you bring it forward for each company then, and tailor it to each company that you actually need.
what's that? That's the actual plan, is it?
No, it's like the whole audit program. Do you know what I mean? Going from start to the finish. Like I say, your audit process, like we did last
Yeah.
week there,
Yeah.
the audit process, and you've got everything is actually coded inside there, and there's so much paper there. Because like no, they're before you guys actually have everything printed out inside in the files, but now they're accepting them because there's so much paperwork electronically, so you can actually do your audit process on the computer and just store it inside there. Which is like that's only one part of it, 26 pages. So like there's massive amount of paper. We're supposed to be aiming towards paperless offices.
I will.
Never. Okay, so let's go over here now and look at one of the big things here now when we're starting off would be our knowledge of the business. I just want to give you a few notes about knowledge of the business because this comes up sometimes as a separate question about the importance of knowledge of the business and stuff.
So the lady says,
Yeah, never really. can actually send these on to you as well if you want them on a computerized copy.
Yeah.
Do you know what I mean? There's no bother to me, just email them on and
Easier to read a printout.
print out, you know, coming towards the end of the year, you know, but for now, like, you know, maybe just, instead of, like, just listening, I mean, sometimes it's good just to write at the same time. Okay, and knowledge of the business is important for both the new engagement and the continuing engagement. Okay, so it's important for both of them. Obviously, for the new engagement, it's like to make sure that, do you know what I mean, you know new business and you're okay with accepting that person as a client. And then for a continuing engagement, it's like, has the business changed from the year before? Do you know what I mean? And is there new things you actually have to be looking at inside there, or have they changed? Are they going to different markets, and are they selling to different people? Have they got new suppliers, new customers? Do you know what I mean? All that's looked at inside in the knowledge of the business. Okay, then under that you're going to have, okay, it should be important, not import. Sorry. Did you write down important, yeah? Yeah. Okay. Okay, so we've as a subheading, the need for knowledge. Okay, and that is, okay, to assess something like above. Okay, it's to assess risks and identify potential problems. Okay, my little thing has gone too far over. Can you see it over now? That should be ACCESS, should it be? Not
Risks as well.
Dave, SSESS, yeah, isn't it? Yeah, yeah, isn't it? Yeah. Assess risks, identify potential problems. There's something on that. Yeah. Determining our materiality level. Okay, and then for developing
By materiality, you mean relevant to them?
yeah. It's like you got material in the statement, and is that material that someone would actually misinterpret the financial statements. I'm doing one of these now as well in life with materiality, all with little bits down along it. We've just done the bones of materiality, and I'll do the same now with for the 4 types of the risk: audit risk, inherent risk, control risk, and detection risk. I'll do a little chart for them so we have them down along as well, and just like we've always just gone through the little bits about what they are, but just to bring them all together. Okay, so that's our need for knowledge: to assess the risk, identify potential problems, to determine our materiality level, and then to develop our overall plan and detailed program. Okay, so our next one then would be the sources of knowledge. Okay, and where will we find our knowledge? Okay, so we look at our previous experience with this particular client. we'd actually visits to the entity. Then you've had discussions with the entity personnel. Industry publications. Industry regulations. And then the entity's documents. Okay, so they'll be our source of knowledge, really. Okay, and like a lot of it will come from actually being out, you know what I mean, in the business itself, and actually, you know, talking to the directors and the staff and stuff like that, and where most of our knowledge will actually come from. And I'm going to go back over the industry regulations here and just give you the list of actual regulations and company law and other laws that actually would affect a business. But I just want to finish with the knowledge one first. And our last one then would be matters to consider. Okay, and they would be like general economic conditions. Like if you're doing accounts and auditing for the last 6 years, so let's say for 4 to 6 years, you'll be looking at people's losses, do you know what I mean, and downturns, and especially in the building sector, which, do you know what I mean, people go out of business, you'd have a lot less turnover in your accounts and stuff, but now you'd actually be looking at maybe things are actually starting to pick up, and you'd be looking at maybe a change in maybe your audit in, you'd actually be focusing on different things compared to what you were focusing on before. Whereas like when doing accounts before, we're thinking about going concern. Could this actual business actually stay in business for the next year? Whereas now, but things are hopefully on the upturn, that they will actually be able to stay in business for the next year. That kind of thing you'd actually be thinking before it actually even start. Then industry conditions. And like anytime you can, like we're doing a theory subject especially, anytime you can bring an example, do you know what I mean? It shows you've got an understanding of it. Like industry conditions here now, the same thing like for your buildings. Whereas like your building, if you're doing an audit of a building contractor, I think like we mentioned there, the going concern would be a big thing over the last 4 years. Whereas now we're looking at it hopefully growing. And the last thing would be the entity itself. Okay, the directors, the management, the ownership, who actually owns the company, the business, the products, the markets, and its suppliers. Okay, and you've got the financial performance and the reporting environment. Okay, I'm looking at the reporting environment here and the regulation environment. Okay, I'm just going to give a little note about that here. Okay, and this is actually dealt with a separate ISA, but I just want to bring it in here because like at the planning stage you have to think about this as well. So this is called, I have to get all them down, yeah? Yeah, this is just a separate thing now we're going to look at here. So this is called the regulatory regulatory. Yeah, regulatory. Whichever word it actually is. The regulatory environment. That's why I'm better with numbers in English.
Are you going to give us the list here?
Yeah, just like, I mean, like, we know.
Companies are.
Yeah, there's 1, 2, 3, 4, 5, 6, 7, 8, 9 of them.
It's good to have more on the same place.
Yeah, have them all in the same place, yeah. Okay, so the regulatory environment and compliance with laws and regulations. Okay, and this is ISA 250.
Is that the name of the ISA?
That's the name of the ISA, yeah. What I'm going to do now for time, just give you the different ones that actually would apply to businesses. Okay, so the first one that will always apply, because we're doing with auditing, will be the Companies Act 1963 to 2013. And as Rich said tonight, we'll have a new law next year, probably. And that's dealing with charities. You know, they're trying to bring in that to lessen the auditing on a charity. Do you know what I mean? We're dealing with big, huge businesses, you know, large companies, whereas a charity, and we have about charities now, maybe in small little villages, where it's like a couple of, maybe 7 people on a board, and they had to form a company to get their funding, and they're actually doing it for the betterment of the village or the town or whatever. But they all have to be audited, and the same rules are used for the big, huge company with like hundreds of thousands of staff and thousands of transactions, and a little one that has maybe issuing 10 checks in the year, and they'll be getting 1 grant, and they do the exact same methods of auditing, and that's like totally like, oh, it is, yeah. So now they're trying to bring in the new legislation for the charities, which hopefully will make things a lot easier. Like we'd have like maybe 10 or 15 charities at work, you know, that we actually work on, and it's like the amount of stuff we have to do for them. You know, it's madness, like.
Do you do it for free?
No, because they all get grants towards doing all this now, so it's grand. Like FAW schemes, just community employment schemes, they all have to be audited because they're all companies. You know, and like say the multiple sclerosis, they all I said, like you've got the one branch in Dublin, but they all have like you've got Northwest Cork, Southwest Cork, East Cork, Cork City. They all have little separate branches, and they all have to be audited.
And they're all individual companies.
And they're all individual. They're like all little individual ones that have to be audited separately, and then all the results are sent back up to Dublin. You know, and then the overall audit is done. Like an audit, then they might get in touch with you in Dublin and say, I want you to audit the buckets in Mallow at the Churchgate Collection on Sunday morning at 9 o'clock and 11 o'clock. And they tell you from Dublin, so you actually have to go in and actually make sure the buckets, yeah, and actually to make sure like that the proper buckets are being used, the proper signage is being used, the proper people are there. Do you know what I mean? Yeah, do you know, but it's like things like that. Like I mean, like you got those charities and like the big huge companies and they're the same rules, which isn't right, like. Okay, so you've got Companies Act 1963-2013. You've got your tax legislation. Employment law.
They kind of change every year anyway, don't they? So there's no
Yeah,
dates
tax legislation would change, whichever, yeah, the employment law would stay mostly the same. There'd be updates for it.
So it was in 2009, I think, when we were doing it first year.
For the employment.
Yeah.
Yeah.
But it depends on what you do.
Yeah, if there's anything significant updated on it. Then you've got health and safety. environmental health, fire inspections, food safety, licensing acts. When I'm talking about licensing acts, I think about if you are a supermarket and you've got do you need a wine license or do you need a license to sell all kinds of alcohol? The kind of licensing I'm talking about.
Bar license, it would be simply a bar license.
Bar, yeah, yeah.
License.
And like some bars, then their license fees are like €250, say. I think it's up to up to 500,000 per year if they're only earning that. And you have a shop who might be over 500,000 who might be selling wine, and their license is €500. It don't make sense. Do you know what I mean? I don't know why. It's just whatever method they have for calculating it. And then the last one is public health. And what I'm about in that is the tobacco. And that comes under tobacco licensing. Do you know what I mean? Inside the shop now you have to have the yeah, do you know what I mean? You can't have them shown, you have to have them covered up. And they actually are coming around doing, there's a couple of people, they've actually come around and looked and see, are they
What
covered?
they do now is they put up a sign saying if you're approved ID for tobacco products, so
Are we sold?
just so people that are advertising they're selling tobacco products otherwise.
Oh yes, I know what you mean. Yeah,
So
yeah.
that you would know places have
It had them or not, yeah. Yeah, because we covered over now, mustn't they? Okay, so that's just like the rules. I mean, you think of the Companies Act 2013 would be, but you've all the other ones you actually have to think of as well as that. Like health and safety, like would be a big issue. Like it depends on what business you're actually doing. Like you in your audit plan, like if you weren't doing a supermarket, you wouldn't be worrying about the licensing acts with public health. If you're doing a bar, you would be worrying about the licensing acts. If you were doing a builders, you wouldn't be worried about the licensing acts. So it's relevant to what business you're actually going to be auditing. Okay, and that's a separate ISA, and later on we'll do more notes on it, but for now, just to know that these are all little legislation that actually affect it. Okay, so that's our regulatory. Okay, so these are the next things out. We're going back to our planning here now.
Finish with knowledge.
Yeah, it's all part. Yeah, that's all part. Yeah, so knowledge is a separate one. Then you've got your regulatory frame, your regulatory environment. I'm going back now. We're going to deal with other bits inside in what our audit plan would be. Okay, so we would be assessing engagement risk. Okay, so this is all inside now, so I can do it, if I draw a line underneath that one so we know it's separate. Okay, so these are, once you've that, and once you've looked at your knowledge, you've looked at your regulations and what acts, what regulation apply to you, you're going back now and you're actually looking at what risks are actually inside in the business. So you're assessing your engagement risk, assessing your inherent risk, you're going to establish materiality. That's preliminary materiality. Okay, and once you've established your materiality, your preliminary materiality, then you're going to assess your control risk. Okay, then you're going to identify your risk or material in the statement. This is all dealing with your risk and your materiality in these sections. Okay, is that okay so far? Yeah? Then you consider your fraud risk. Okay, because your as your auditor's hat on is not to, do you know what I mean, detect risk, but if you come across it, do you know what I mean, you must be ready to actually, well, it isn't your job to actually find it in there, but you can detect it, do you know what I mean, and what you actually should do, and what control you're going to put in place when you do find it, and all your reporting and all this you have to do. But we'll be doing that later on as well with fraud. Okay, then you're going to have your internal controls. And systems. Okay, you're going to set your sampling sizes. And you're going to look at your implications. Okay, then you're going to look at your implications of risk of material misstatement on your substantive testing. That's a mouthful in itself. It's like, okay, you set your internal controls, okay? So, you know, your internal controls are the controls that the business has. Okay, we're going back over that now, right? So if you can rely on the internal controls, you're grand, okay? You'd have to do less substantive testing. That the controls in the company are working good. But if the controls in the company are not working well, you do more substantive testing, which means your materiality is going to actually go up. So the more substantive testing, then the more materiality is going to be higher, the more substantive testing you're going to have to do.
Which means I was going to
Yeah, to do it, yeah. So that's why you to set your risk first, set your preliminary materiality, look at your internal controls, set your sample sizes for your internal controls, and then looking at your substantive testing. So look at all these on to one another. And we're going through all these, do you know what I mean? The other risk ones, going through how to actually look at our internal controls and our substantive testing. Is that okay so far? Yeah? Then our next job is to develop our audit strategy. Okay, then we're going to look at staffing and time budgets. Then we look at if there are any related party issues. And a good group for related party, for example, would be you've got the director of the company, okay, who owns the building that the company is operating in, and the company is renting that business, the building to the business, which would be a related party transaction. For nice sum, yeah. Or you could have that could that be, yeah, Joe, if the directors have given a guarantee to the bank to pay a loan off if the company goes up this way, in other words.
Well, they look as deep as how much they're paying the directors and stuff.
Oh yeah, and once when we look at the audit report, then actually you mention on the audit report, you mention how much your salary was for this year, and you compare it with last year, and if there's pension payments being made for them, how much is paid this year and how much is paid the year before. So that all has to be mentioned. Like you're doing your audit, you like have all your audit report, you've what's called a letter of representation, which we're doing, and you've got a director's report, and you've got your set of accounts, and behind it you've got all your notes to the accounts, and all that kind of stuff is actually mentioned, how the accounts are made, you have to list all your debtors, your creditors, your director's payments. There could be like 20, 25, 30 paid, different bullet points actually mentioned depending on the size of the audit. And that's the interesting part actually. But I find, it's interesting, do you know what I mean, all the notes you have to make and make sure you actually have them all in. Okay, related party issues. Going concern.
Do you know if you're auditing a company for the first year and you find something that's been maybe obvious for a couple of years, or it looks like it's been there for a couple of years, what?
We could go to someone above you and see what they do.
And with the audit, we just give you permission to check their books.
Yeah.
And everything seems, let's say it's, I don't know.
It's
That
very,
obviously does happen, doesn't it?
yeah, it would happen.
It
It'd
looks
be,
like there's a trend and the previous accountants didn't do anything about it.
yeah, it's like how you want to,
Yeah.
yeah. Like, and you have to, like, be shown to do something about it, like, you have to do something. And, like, if what happens then, like, say, you mentioned the directors and they don't want to help you, do you know what I mean? They won't, do you know what I mean, do anything about it. Then you mention that in your audit report, that like, simplify, I'm giving this a clean bill of health, except for,
Yeah.
and you mention after that what thing that's actually in there,
And
so you
then
cover
next
yourself.
to the new auditor.
Yeah, that's the thing, do you know what I mean? That's dealing with a real life situation, like, do you know what I mean? You're dealing with the directors, you're trying to keep your business and keep their business. Yeah, that's it. I mean, you're supposed to be independent, do you know what I mean?
If
You're
you don't
supposed
really
to.
want to keep them if they're doing things wrong, because it's drawing
That's the other part of it. Yeah, don't draw attention.
They're coming from you.
And then like they can bad name you around the place, and you don't get. I mean, it's a quite a bit of a minefield at times. Like,
for advising them then to get out of the mess? Their financial advising.
yeah.
And there's no support that can keep your independence, is there?
Well, you get on to the like whatever institute you're with, and they can help you. You know what I mean?
Saying people bad about you, that's defamation.
Like you report like anything like that, like to your own institute, and there's like especially like the member services bit there will actually help you. You know, if there was a very complex thing there, or if you had an issue with, say you had an issue with another auditor or another accountant, do you know what I mean? You'd get onto them as well.
If you know that the previous accountant has been filling things for years.
If you knew that her account was fiddling, you actually wouldn't take on.
Yeah.
You
No,
would
if you didn't actually realise it until you took over.
until yeah, then you're in trouble. Like
If you go over a new
yeah.
account after, I don't know, say the old accountant dies or something like that, you take over then, you find out that, Jesus,
this mess, yeah. And that's where like I mean you'd actually at the start try and get your knowledge and try not to take it on, especially I mean everyone here thinks about different things, businesses and stuff. It can be a minefield out there sometimes. I would mostly just want to keep things right.
Yeah.
Keep the tax office happy, keep the criminal registration office happy, and work away. And then we would have events. Look at how we're going to look at events after the balance sheet date. Okay, so events after balance sheet date would be like what an example was given before to us was that if you were doing the audit, okay, and everything was fine, and it's just before you signed the papers, so like say it was 6 months after the year end, the main supplier, the main supplier to your company you audited went up on fire, and they actually had to go and find a new supplier, and you only get one supplier for everything. Then that would mean like can the going concern will be an issue. Can the business continue to trade? Do you know what I mean? So you have to maybe go back and change your opinion maybe, and like is it significant or is it not significant? I mean that's a big thing. If it's not significant, you probably won't do anything. If it's significant, you're going to have to go back and look at it. And we'll be going through that as well, events after the balance sheet date. Okay, but they're the main headings for our audit planning. What to think about when you're actually doing your audit plan. And if you look at the audit planning memo, do you mean, and see that the 11 points here is actually a good one to actually have out when you're doing about audit planning as well. Okay, you see all the headings, like, so they're the exact same headings we have here. So you've got your planning summary, your matters forward, acceptance and planning. You've got your overall engagement and reporting requirements, acceptance and continuance, knowledge, internal control systems, audit risk assessment, fraud, materiality, setting sample risk, specific risk assessment, other matters, which are your related parties, going concern, events after the balance sheet, then nature and timing and extent of audit procedures. The audit file set up, use of independent experts, stock take attendance, use of service of organisations, independent partner review, external consultation. Okay, so they're the things you'll be actually thinking about when you're actually doing your audit planning.
Is that a guaranteed question?
No,
Plan, no.
no, there's no guarantees.
How you like it?
Yeah, there's the first question, which has I think five parts, which you have to do question 1, and then the other one, then there are 6 questions to 4.
As a percentage of the syllabus, what would the planning side of it be?
Well, planning is a huge part because there's like about there's 5 or 6 or 7 ISAs, so you're probably going to get something on planning.
So
I
it
mean,
might be maybe 2 of the
and like what they do is like they go through like the way we've got our sales cycle, our wages cycle, our purchase cycle, our fixed assets, our intangible assets. Like they're all going to be some one of them on it. And it seems to like wages and creditors a lot. I've been looking through the past papers there over the last couple of weeks, and they like the wages and they like the creditors. But we'll be doing all of them. But that help instead of reading through all those pages of, you know, the planning. And if you look at this, if you want to look at the audit planning letter, it actually goes out to the directors. It's just like a 4-page letter goes out to directors telling you what you're actually going to be doing in the audit. It's at the back of the ISA 300 notes. So this one, this one? Yeah? And see, if you look at the headings there, you're actually looking at. So we're looking at independence and objectivity. Then you're looking at the if you have a long-term association with the business and with the audit, provision of non-audited services, and provision available for small entities, and then you've got the nature and scope of the audit. And it's the changes are there to the Companies Act 1963 2013, it's down as 2009. And in the finding, it's on page, it's on the,
Oh, yeah,
yeah, there, the 3rd page in. Just change that to 2013. And you've got the findings from the audit. So at the end of the audit, you actually write out another letter to the directors or the shareholders and just say what you found in your audit and areas that can actually be improved on for the next year. And see, now this is dealing with the independence of the auditor, okay, and like ethics stuff. So I'm going to give little notes about that as well, about the independence, showing that they can be independent. And the exam questions, they have that a good few times as well about being independent. I mean, about, I think it's 15% of your turnover shouldn't come from the one client. And if it is coming from the client, is that affecting your independence with that audit? Do you mean if it's over 15%, if it's 20% of your turnover, reliant on them, yeah, that's it. And that affects the audit, the audit opinion you're actually going to issue. So these are all the things you actually be thinking about. we will be
Does
thinking
an
about.
auditor get audited?
You know, because an auditor normally is not a company. Do you know, most accountancy practices can't be, auditor practices can't be a company.
Because their turnover isn't taken.
No, because you can't become a company.
But how,
Yeah.
how do they,
Legally.
like a sole trader in the company or?
Yeah, well, a sole trader, we're dealing with limited companies here now. Do you know what I mean? A sole trader has an option to audit. A partnership has an option to audit, whereas a limited company and a PLC company have to be audited.
So an auditor can do it, or they probably can do it.
Well, you have their institute over them, coming around monitoring them and the revenue and stuff like.
So there.
Yeah,
They're audited by
So
their
it's
own.
revenue stuff.
yeah, they're all, yeah, that's it. Yeah, you have monitoring visits every 3 years. Yeah.
There won't be another auditor auditing.
No. Oh, they'll come and they'll get your client list and they'll say, they'll pick out who they actually want to look at, and they pick all the companies, and then your bigger and your smaller clients, and they go through them and see that you're doing them. Yeah, sample, yeah.
So they are audited, it's just not called that.
Just not called that. Yeah, monitoring. Okay, so that's our audit planning. Okay, and going back over the bits and pieces as we go through, I'm doing exam questions on it as well. Okay, I was going to go through this, but it's 8:45 now, isn't it?
No, wait, start.
But like, it is like, it's like I said, like starting into something all at 8:45 like is not a good plan, like, is it? No?
We can start at 6:15.
I can, yeah, for tax. Okay, I know I had planned on doing the sales cycle and actually going through other stuff, but we have plenty of time, there's no problem all the time. We need to get that part done tonight with the audit planning. Yeah? So we leave it there for tonight, so will we? Okay.
We did do that last year. Would it be something that you want to do again this year?
What's that?
6:15. Remember, because it made up extra classes or whatever.
People might not be able to come.
Or
You would be able, you'd be struggling to be here for, you know. Yeah. Well, see, like, you know, near the end, I mean, if we're, like, 2 hours of auditing any night is going to be enough. Do you know what I mean? Because it's theory. And if, like, we could actually maybe do an exam, a tax question for an hour, do you know what I mean? Half an hour, 3/4 an hour or something. Do you know what I mean? To make up for the tax side of it. If that'd be alright with you.
Yeah.
Perfect, yeah, thank you.
Would you be able to set a provisional date? What